Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, good morning everybody. Welcome back to another live stream. Sorry I'm late. We had GDP numbers come in better than expected. This is good news for certain things, not so good for other things, but let's talk about it. I hope you guys are doing well. Do me a big favor, hit the thumbs up button on the stream if you haven't already, and let's jump into some analysis. Good start to the day, tell you that. Final GDP numbers came in 2.4% compared to a forecasted 2.3%. I'm going to be obnoxious as I have been for the last few weeks. Where's the recession, right? If people are so convinced, you look at the headlines, you look at all the news outlets, they're selling you every single day that the market is going to fall apart and that it's doomsday. And yet, final GDP numbers came in better than expected today. At the same time, unemployment claims came in line with expectations. You know what recession signals look like? 300,000 people filing for unemployment, not 225, which is very much on par with a decent economy. We see the labor market holding up decently well. We have GDP numbers beating expectations. So again, I ask, before you jump to the conclusion, which I've got a lot of people commenting on my videos, this is, the market's going to tank. This is it. We're going to crash. Trump's going to run us into the ground. Again, if you leave your politics at the door for a second and just look at the data, the recession call to me is really far-fetched. It's really important that we make that distinction because, again, you may not like Donald Trump or you may really like Donald Trump, but either of those reasons should have nothing to do with how you view the markets. And unfortunately, this year, I've seen just a massive number of people on both sides, by the way, making that stupid mistake. So for example, you can basically point to both sides and be like, that was really silly. So when Trump first got elected, right, and people got absolutely euphoric, oh my gosh, we're going to run off into the sunset, no taxes, businesses are going to see, no regulation. And certainly some of those things might come to fruition, don't get me wrong. But the point is the market oftentimes takes a little and runs with it. So euphoria set into this market. And then certainly that got stretched. And then all of a sudden we see this massive correction as people start worrying about tariffs. And now I think people have been doing the other extreme. Oh my gosh, Trump's going to ruin the world, and trading with their politics. Again, don't let it be you. I'm telling you what, you're going to regret it. If you trade based on your politics, you're going to cloud your judgment on both sides. You shouldn't be euphoric if you like Trump and depressed if you dislike Trump. That is a terrible way to approach trading. At the end of the day, the markets don't belong to Trump. They don't belong, he doesn't ultimately dictate whether they go up or down. He does play a part in short-term volatility, but it's something we have to think about, right? So many people making that mistake. So don't let it be you, regardless of how you view certain policies and things like that. Trade the data. And the data right now is not suggesting that a imminent recession is on our doorstep. You know what else is not producing recession calls? The bond market. The bond market's a really smart market. What I mean by that is it looks at a lot of economic data. It looks at inflation. It looks at, economic growth, GDP numbers like the ones that just came out, bumping this number, right? So the point is when we look at the bond market and we look at the dollar, if there was a massive recession on our doorstep here, we would see some bigger signals forming, I think, right? Most of the time you would see bonds ripping. Well, bonds are down today, down by 0.36%, showing you that the market's not freaking out about a recession. In fact, in 2018, when we had, what I would say was actually a more terrifying scenario for 2018, 2019, tariffs and uncertainty and recession, growth concerns, we actually saw bonds rip, right? So that is what I'm pointing out, is if you really think there's a recession, bonds are not agreeing with you. And usually they call recessions pretty accurately. So just be careful out there. Like I said, there's a lot of stuff. There's a lot of FUD, fear, uncertainty, and doubt being sold on the news headlines that I've seen it too many times. People chase the news headlines and then they miss out on major rebounds that occur in the markets. I look at this, maybe I'm over optimistic, maybe I'm wrong, maybe all of this is a silly idea by me, and it wouldn't be the first time. I'm wrong sometimes, but I view this as an opportunity to actually buy stocks that I like, and I have been buying stocks. I bought some here, bought some here, bought some here, individual stocks that I like. So I'm taking this as an opportunity to say, look, the economy's not falling out of the sky. Employment data looks decently okay. We may see a little slowing in the economy, but please understand, just like inflation, right? People sometimes mess up GDP growth concepts, right? People sometimes will make the statement that we are going into a recession when they see growth slowing, right? There's a difference. Recession means this is growth, right? So G for growth, economic growth. This is a recession, right? Growth is deteriorating. We're slicing off growth from the economy. The economy is actually seeing decline, contraction. We've been in this environment, right? Things have been really strong for GDP growth. What I think is most likely, and what the market kind of consensus, consensus is more like thinking this, right? It seems like people are forecasting this. Some people on headlines, right? But what the bond market is predicting, according to what we just discussed with the 10-year yield, is probably something more like this: growth, but at a slower pace. Okay. That's not recession. That's just a slowdown. That's just a cool off. And what could that mean? Well, that could mean that we slow down and then we ramp back up. Or it could mean that we slow down and then we cool off. But we'll have to evaluate that when we get there. I think this is the most likely scenario. I think we're going to cool off in GDP growth, but I don't necessarily think that we're going to enter into doomsday territory like the news headlines will have you believe. Okay? Just be careful and trade the data. That would be my opinion to share with you here today. So when it comes to trading the data, I'm still bullish on stocks. I'm bullish on things like Bitcoin. I think we have a decent outlook ahead of us. The Fed wants to cut rates. We have all the tariff worries right now, but around the corner, we'll hear about tax cuts and less regulation. Those are positive things. So I actually think that, if we can start to constructively put in some higher lows and higher highs on things like the S&P, the NASDAQ, the Dow, if we can see constructive bottoming out, we are going to see, in my opinion, a really strong short squeeze. Now, I've been talking about that because, again, I haven't checked this. I have to check this out. And then we're going to bring Marco and Miko, I think, as well, but not sure. He's not here yet. But we'll definitely have somebody joining the stream here in a second. Can I show you something interesting? Let's see. What's the data? Still bearish? Why you got to do this to me? Why do you have to tell me that the investor sentiment survey is yet again over 50% bearish? Because that just makes me more bullish. When everybody is scared, there's some opportunities. Can I tell you something? I'm not going to pull up the data because I've got to jump to our next segment of the show. But historically speaking, when the AAII investor sentiment survey has this kind of bearishness, most of the time, not always, most of the time, this is a great bottoming signal. Okay. When everybody gets scared in the stock market, the expectations go way down. When an expectation goes way down, it doesn't take a lot to rip the market upwards. Okay. So if everybody starts getting nervous about a particular asset, in this case, stocks, in this case, risk assets, right? One good piece of news. For example, hey, negotiations with tariff progress in a positive way, and maybe Canada and US are at the table and they figure out a deal. Boom, market rips. Okay. So just be careful, right? Everybody's bearish. You want to be careful being in the same camp as everybody else. My opinion, I think the markets have tried to bottom here, putting into some constructive lows, and I'm going to look to continue to trade that higher. If I'm wrong, I'll stop out, take a loss, and move on. Okay, up next, we've got Miko and Marco. Let me just remind everybody who has not taken advantage, this is your final call. We've got 2 days left to get access to the Edge Finder completely for free this week. If you haven't been trying the Edge Finder this week, here's how you can do it. It is completely free to access the Edge Finder until the end of this week. Here's the information you'll need for this. Number one, join the Telegram channel. Number two, right here, the Edge Finder is completely free to use this week only. Everybody who is watching this, if you don't have the Edge Finder and you'd like to try it out, you guys know I never shut up about it. It's a great tool. You should try it for free. It's this week only. Take advantage of the free week pass that we are doing for everybody. Link is in the description and in the chat right now to join our Telegram and get access to that. Okay, guys, up next, we're joined by Miko and Marco to take a look at some technical setups this week. Stay tuned.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, we're back with Miko and Marco for our Thursday segment. We do this every week. We call it Technical Thursdays, where we take a look at a whole bunch of charts and talk about trading ideas for the remainder of the week. Miko, Marco, how you guys doing?
What's up?
Hello.
Good to have you guys back. And again, jumping right into it with this crazy market we've seen. Metals are up today, dollars down. I mean, I guess those two things kind of usually move in tandem. You got silver up 1.5%. Miko, I got to ask, are you in any silver trades?
I am guilty.
Okay, nice.
Yeah.
I kind of figured you might be because we talked about it last week. I think I might be in the same trade as you, which is awesome.
Yeah, I think you got a slightly better entry, so kudos to you. But yeah, I did hop into a silver position. Was it yesterday? Yeah. Oh no, the day before yesterday. I was a little bit late because I was actually looking for price to come a little bit further down. I was talking about this level here last week, but we didn't quite get there. So I kind of adapted on the spot a little bit, and I saw that price was holding this level, so I just jumped in on the 4-hour chart, not yesterday, the day before, and so far it's going pretty okay. I'm looking to see if we can make new highs past 34.8, so around 35, and then yeah, hopefully we can trail stops and just see where price goes. I'll probably secure some profits at the high, but the plan is kind of just let the trade do its thing. Gold's looking pretty bullish as well, so yeah, I'm pretty bullish and finally got an entry on silver, so hopefully we can continue.
Nice. Yeah, I thought about you when I took this trade. I was like, I should probably send Miko a message because this is like hitting our level that we talked about on stream, and it looks pretty good. I think, yeah, as you pointed out, I'm kind of at the decision point here with my trade. I like to trail stop, so I'm looking for some kind of closure here today or tomorrow. If we can get some strength above that area, I'm going to look to take this stop loss and trail it into profit some. I had a question for you too, Miko, on the silver side. Trade management wise, right? We love to talk about setups, but also equally important is talking about trade management. If you have a trade like this, how do you manage from here? Do you take partials? Do you trail a stop? And I guess bonus question, do you ever add to a trade? So like if this were to happen like this, where you set up again, would you add to that trade again?
Yeah, in this case, I would. Normally with some FX pairs, it gets a little bit choppy, so I wouldn't be so confident to keep adding because we're going to top out soon. But in a case like this, where I do expect silver to really break to the upside and kind of follow in gold's footsteps a little bit, in this case, I'm going to lock in some gains at the high around 34.8, but then I'll just look to trail. Normally, I always kind of have a target, which I might trail to. In this case, I don't really have a target past that point, so I'll lock in some gains there and kind of just let the rest run. And see what we can do because silver can really move, and then hopefully probably some additional entries on the retest of that high as well, and maybe the retest of that high depends on how big of a break it is as well. But yeah, silver, there is a lot of value here to the upside and a lot of momentum. That's the key thing. There's a really strong trend in the higher time frames, which if that does continue, it can really push. So yeah, in this instance, I'll just trail and just see how far I can go, how far I can go.
Awesome. Well, fingers crossed we get some nice breakouts there. Keep going on the silver idea. Marco, question for you. We of course, silver is way less popular than gold. A lot of people watch gold. I'm curious your thoughts on this side of things. We've talked about this in the past. Miko tends to look for that kind of the catch up trade, and Marco, you've talked about how you like the clean momentum kind of leadership role. So in this case, gold's been the winner, right? Gold has really, really done quite well. Do you think this has room to continue? And whether you trade it or not, how would you enter a trade like this if you had to?
Yeah, so I did have a long on gold, which I closed last week. I trailed it for, I think, 2.5 R, something like that.
Nice.
And currently, fundamentally, I mean, these are the strongest plays. So the metals are currently on the edge finder very bullish, and overall in this risk-off environment, a very good play. So between the two, well, I mean, silver, as you guys are saying, is playing a bit of a catch-up. I do have both of them on my watch list, and I'm potentially looking for setups on both. But I do think silver right now is actually a bit of a better candidate. So I'm actively looking for an entry on this 1 hour chart. And for me, the price action on this 1 hour looks just a bit better, but let's say more powerful than on gold. I'm seeing a bit more momentum. So, and also the catch-up trade. Gold is the leader, but again, silver has a lot of potential to actually follow that move. So I prefer silver if I had to pick one, and I would really like to get a nice entry like a flag or a break and retest that would be in line with the fundamentals. And I would probably have a somewhat of a bigger stop loss, maybe like this, or maybe even at these levels right there, but definitely a bigger stop loss with these fundamental plays. So yeah, my pick would also be, in this case, silver.
It's been interesting. I mean, the metals call, if I'm being honest, Marco, when the Edge Finder first sort of spotted out gold and silver as bullish ideas a couple weeks ago, I looked at that with my eyes squinted and I was like, really? I mean, this is so late to the party. And it just goes to show systematically why it's important to have, quote unquote, a system, right? Because at the end of the day, sometimes my system doesn't feel right, but I know it's a rule set that I like. So again, whether you're an Edge Finder user or you use something completely different, I think it's important that whatever system you're using, sometimes just let the system tell you, based on your back testing, based on your work, based on in the Edge Finder's case, the fundamentals, what the story is, rather than kind of thinking off your gut, right? That's a thing that I've definitely tried to stick more to this year. That's been one of my New Year's resolutions in my trading, is to stay more systematic than ever. Try to push out the biases. The other thing I just wanted to mention briefly, because we just talked about gold and silver, this is an important indicator that we occasionally pull up on the stream. It's the gold to silver ratio, and this is a easy way to read this is how many ounces of silver do you need in order to get 1 ounce of gold. So right now, it takes about 89.5 ounces of silver in order to purchase, quote unquote, or exchange for 1 ounce of gold. What we've talked about in the past is that when metals markets go bonkers, like when they're really going crazy, you usually see silver outperform. I guess that's not a guaranteed mechanism, because recently we have not seen that. In fact, we've actually seen the opposite, gold performing. But I actually wonder, because we're talking about the silver possible breakout, if maybe we're starting to see this top out and that the gold silver ratio may actually start to see some decline on a more consistent basis, giving silver that room to outperform and really run strong. One of the big reasons that we're seeing a little bit of metals pop here today, guys, is the dollar index a little bit weak here today, and definitely weak over the last month or so. Miko, what are your thoughts on the dollar? Are you bearish on it, bullish on it, neutral on it? Watching any currency pairs?
Yeah, so with the dollar, I do think there's a bit more room for us to retrace into. Of course, today we're a little bit bearish, and it's kind of helped out with some of the metals. But the way I see the dollar right now is that we had that massive move a couple of weeks back, and I'm looking at this bullish move as being the retracement of that. I like this level here around 105.5. So my impression right now for the dollar is that we're kind of seeing a pullback with this momentum, but I am expecting more follow through to the downside until proven otherwise. So my expectation is more downside, just waiting for a bigger pullback. And in terms of currency pairs I'm looking at, Euro USD looks really good. There's a couple levels just below us on the daily chart, which if price can get to, that would be absolutely superb. And hopefully you'll find some entries there for, again, a swing to the upside, the inverse of the dollar there. So I'm really liking the way price action is setting up on the daily chart, because we had that really big bullish move and we're kind of taking our time on the way down, which is something I look for. I want price to be really powerful when it's following trends and corrective when it's retracing it. So 1.06 roughly, 1.055 roughly is a nice level, are two nice levels I'm looking at, and pound dollar as well. I'm keeping an eye on this one. A couple areas below us, 1.28 something I'm looking at, and 1.27 areas where we can pull back. Potentially the dollar could pull back a little bit more, and then we might continue.
Cool. I like it. Yeah. Dollar index, like I said, big drop lower, starting to pull back, might give a chance for some of the dollar bears to reload on some setups. Same question to you, Marco. What you watching any US dollar pairs? Same thing, euro pound, or are you looking at anything different?
Yeah, so just to mention about silver, I just saw that it lost the bullish reading on the Edge Finder.
It did.
Yeah, I think 4 hours ago when I did my morning forecast, it was bullish, but now it lost the reading, so I'll actually be focusing on gold until silver gets back on the list. So yeah, gold is now, let's say, my top metal pick. As far as the dollar pairs go, I have the same. So it is the euro US dollar and it is the pound US dollar. For me personally, the euro US dollar looks a bit better because on this 1 hour chart, we are kind of heavily descending right here. So we are breaking the lows and retracing, which is or could be a very bullish signal. And also, the Edge Finder is a bit neutral, but we did have sort of a bullish / neutral reading in the last few days. And also I like the macro picture, if you want to mention that. So money is kind of flowing from the US into Europe. Europe is, as you have said, increased a lot of military spending, which could increase inflation, which could make the ECB hawkish, which could raise the value of the euro. So I like that play as well. But to be honest, my current focus is going to be the metals. So it's going to be gold and maybe S&P or the NASDAQ because those are getting some very clear bullish signals on the Edge Finders. So for the Forex side of things, I'm maybe pausing a little bit for now for this week. Again, the JPY pairs have been very interesting in the last couple of weeks with the expected yen strength. That kind of died down a bit now. So the dollar pairs look a bit more interesting, but metals and indices are my top pick for today.
Okay. Yeah, fair enough. And I love to hear it because that's kind of my playground as well. Definitely the NASDAQ. I have a long position currently. We'll see if that plays out decently. But on the 4 hour chart, what I like here is that we actually came down and are trying to fill this gap. I'm actually fine if we pull back here, test this area, but I have a stop below the 61.8% retracement. Yesterday's sell-off. Again, the headline cycle is so hot and cold, right? One day it's good, one day it's bad. And really when it's good, it's when nothing happens, and it's bad when anything gets said about tariffs. So that's been the theme here recently. I think we're going to settle out. And I think that the April 2nd, I've said this over and over on my channel. I think that the low is in, at least for now, for the indices. I also think that the April 2nd, quote unquote, doomsday that many headline news articles will tell you about, the tariffs and they're going to destroy the world and all this. I think it's overblown. And what I think will happen is it's instead of a buy the rumor, sell the news event, I think it's actually a sell the rumor, buy the news event that's setting up in front of us, because I think everybody is so scared. Oh my gosh, sell the tariffs are going to be terrible. And I think what's likely to happen is that the worst case scenario that people are fearing and pricing in right now in the market. When that does not occur, and it could occur, something terrible could occur, don't get me wrong, but I think most of the time the market fears the worst, and then what actually happens is not as bad. And that pattern is regularly visible in the options market. I'm not going to get too far into the weeds with this, but basically options oftentimes sell their expected moves priced into options premiums usually signal the market thinks it's going to move as a visual representation. Let's say that options premiums are selling this much expected move. That's how much is expected into the future on the NASDAQ. What historically is observable in the options world is that most of the time the market moves about this far. And that difference, that premium difference, is why I love selling options, because again, usually they're overvalued, and that most of the time pays out nicely. Not all the time. Sometimes the move actually ends up being like this. But my point is that's observable in a broader sense in markets in general. The worst fear events, when they usually don't actually happen, there's a nice bounce back. So that's a trade that I'm playing right now. It's fundamentals and technicals based, but we'll see. Miko, what are your thoughts on indices right now? They've been a volatile place. Is this unclear? Do you think it has more downside? I mean, when we take a look at the S&P 500, I do have to admit here, the technical retracement to this 38.2% retracement to 50% retracement zone is kind of do or die, in my opinion, as you did get a pretty sharp reaction yesterday. What are your thoughts on indices, any of them so far?
Yeah, so I am looking at that area quite a lot on the S&P, which is 5,800. We've also got the 200 moving average.
Yep.
In that area there as well. So this is kind of like my kind of wall here. If price clears that, then I'll be bullish again. If price respects that, then we could very much come back into the low around 5,500. There was a pretty strong drop yesterday for S&P after reacting with that, so I'll be a little bit careful of that. However, on an intraday level, things actually look pretty bullish. We are coming back into an area. I'm pretty sure the US 30, NAS, S&P, they all had the gaps at the start of the week, and it looks like they're coming back to potentially fill them, and that could be a bit of a support level for potentially move back up again. So intraday, we might still be bullish, but S&P, that level and that rejection would worry me. NAS 100, interestingly enough, I think we did test the 200, maybe just about, but we did miss this level here, and that's kind of the level I was looking for price to get to potentially test for maybe another move down. So again, maybe in the lower time frames, I do kind of like the buys there, kind of like your position there, Nick. For another move to the upside, then perhaps we might sell off. Again, if it does clear that level, that's where I will rest that bearish bias and start looking at some longs, and maybe this was just a bit of a fake out of the 200, and then we're back bullish again, back to the highs. But that level there around 2,600 for NAS and 5,800 for S&P are my kind of levels, critical levels, which if we hold, I'm bearish. If we break, I'm bullish.
Yep. Great point about the 200-day moving average. Of course, a huge psychological level, especially when you talk about U.S. indices or just indices in general. The 200-day, you hear it referred to all the time. Oh, we've lost the 200-day. We're above the 200-day. So I agree. A bullish catalyst would be if you can actually break and close above that 200-day moving average with some confidence. And a bearish one would be as if we actually do see some follow through on a price action basis to the downside from here. Because again, I don't have it on my screen, but the 200-day moving average in this general area, if that's rejecting right now, that would be a little concerning. If on that 4-hour chart, like you just broke down, if the technicals start to look wobbly there, then we very well may see a leg lower in this market. I personally think that there is a likely chance, not a certainty, but a likely chance that we have started to bottom. One of the big reasons I can't stop mentioning this because it's so important is the investor sentiment survey that we regularly refer to on this channel. Look at this bearishness. And I saw somebody do a deep dive on this, so I don't have the stats in front of me, but I just wanted to share it with you guys and the audience. Out of the times in history that we have had bearishness that has reached these levels, a couple years of those that we've had similar things: 2020, 2022, 2008. All those were excellent generational buying opportunities in the equities market. So my point is, everybody gets so convinced that the market's going to crash at the worst possible times, right? And then when the market's at the highs and everybody's excited about Palantir and Tesla, nobody wants to sell in those moments, right? They want to just double down and borrow money to buy more stocks. So it's just a psychological thing. The whole thing about markets is so psychological. So I just think that's worth mentioning and repeating that if you're bearish on this market, you may have a perfectly reasonable approach and reasoning for potentially having a short position or betting short term that it could continue lower. I'm not saying that you're just an idiot if you're bearish, but you just have to think, okay, if everyone's already bearish, we really need a strong reason for this market to keep going lower. Marco, you mentioned maybe watching the NASDAQ or indices as well. I'm really curious your technical basis, because again, we all have our nuances, our specific ways of entering the market. I'm very fundamental, so it doesn't take a lot to convince me technically, but I'm curious about you. Are you more like Miko, where you're like, okay, let's get that 200-day to break back and look positive? Or are you looking at trades at this moment? What do you think?
Right now on the NASDAQ, I am actually looking for trades because of that's such a bullish reading from the Edge Finder. But I would need to see on the 1 hour just that leg of momentum and then a flag or like a break and retest, any sort of an entry on the 1 hour. It doesn't have to be picture perfect. It can have some warning signs, but I need to see just that little bit of signature of momentum on that 1 hour, which I like to get me in the trade. So that is the only thing I'm waiting for. That is the only thing I'm looking at. It's not really the 200 moving average, although I think that is very powerful. I'm going to stick to just Edge Finder plus the technicals on the 1 hour, with probably quite a big stop loss at some sort of a significant level, and that could be a very good play in my opinion. And yeah, as you said, it's all about the psychology, and it's pretty similar to Bitcoin. When everyone is bullish, ecstatic, it goes down. When everyone is very bearish and it thinks Bitcoin is going to go to zero, that's when things start climbing up in regards to the price. So, I mean, Bitcoin is no different than a stock. It's no different than a currency. It's all about the psychology. So the actual instrument that you're trading doesn't really matter that much, because it's people that are trading the instrument, and every single human thinks pretty much the same if they are kind of a newbie to investing or newbie to trading. So, yeah.
Yep. I mean, it's fascinating. My sister is a really, she's not like focused on markets by any means, but she asked me about like, when do you buy stocks, and or when they're at highs. There's been a couple of times where she's like, my stocks are doing so well, and what else should I buy? And then when they're down, she told me the other day, and this is, not her fault. The markets are a hard place for people who are staring at them 24/7. She does not look at the markets. So she's like, I sold my stocks. I got scared. And I'm like, well, that's the natural thing. And that we've talked about this together for, at this point, quite a while. We talked about Bitcoin, and it's almost like, is it that easy? Is it like, really the concept is just reverse the psychology of the masses and you can actually do okay? And I think the answer is yes. I honestly do think that if you just only ever buy things like stocks and crypto when everybody's terrified of them, and then maybe sell them or just hold them and don't add more money when they're up, it's almost like, is it that easy? And I think there's nothing is ever that easy, right? There's some psychological pain that comes with holding things as they're crashing, and I should have sold them at the highs, and there's so many mistakes that people can go down. But I do think one of the easiest mistakes to correct is just when you see everybody. I mean, Marco, you give us the grandma indicator. Again, we love these people. I love my sister. You love your grandma, but they are not people who are active market participants. And so their reaction is just, we can't fault them. It's just the natural reaction to how human psychology is, right? So we probably want to do the opposite in the most kind and respectful way to what the mass thinking is. It's just something to think about.
Yeah, I just don't want to teach my grandma anything, because then she's going to give me mixed signals. So I'm just going to keep her in the dark. And that's going to be the best.
Yeah, no, exactly. And it's like, you have to be kind to these people. It's not their fault. They're not junkies like us who stare at charts all day long. So no, it's a good thing to at least be conscious of, and think about last section I wanted to go through with you guys is the yen pairs. Is there anything on the Japanese yen that you are curious about, interested about? Miko, last time you were on, you were talking a little bit about a yen cross, I believe. Are you watching any yen pairs right now?
Yeah, I was shorting Euro Yen, but I didn't really like the price action, so I did close that trade earlier this week. I'm still really bearish on the yen pairs, so I'm looking for a sell opportunity because I do think we could still be seeing some big swings for a lot of them: Euro Yen, Pound Yen, CAD Yen. But I was looking a lot at the yen basket. It looks like yen is still a little bit weak, but we are still up some prices where I do think price can turn around. So looking on the 4-hour chart, I'm kind of waiting for another signal, potentially a push back to the high, and then see how things maneuver. Pound yen, I'm also looking for a big sell on this one as well. I like how we're still very corrective on the way higher. Basically, the plan with this one is try and catch another one of these highs here. 1, 2, expecting a third roughly in that area as well. So pound yen is definitely on my radar too. Hopefully a bit more upside into 196 where that trend line is, and then hopefully some sales as well. And I also do like CAD yen, which is having a bit of a pullback as well. If I whip out the fib from the high to the low, anywhere roughly in this 0.5, 0.618, even maybe 0.786 is kind of where I'm looking at. We do also have a nice trend line here as well. So with the yen pairs, I kind of see a bit more upside, but I am getting ready to short them. I'm looking for some really big swings. As long as they don't do any major break of structure here on the daily chart, my anticipation is another lower high on the daily and swing back into support. So yeah, it's still pretty bearish, but they've been bullish for a while, and I don't think they're quite ready to short yet.
Very cool. Yep. No, it's been interesting. Yen pairs kind of mixed now. You know, they at one point were looking super strong or to the downside, and then kind of missed the some data points, and now have swung back. So we'll see if we can get a more clear trend going. I still think overall yen strength might still be a theme, as the Bank of Japan is likely to hike rates while the other ones are looking to cut. But we'll have to wait for the technicals to start cleaning up a little bit more, or like you said, wait for some of those more premium opportunities if we're going to sell into kind of a rally here. So we'll have to see. Guys, I want to thank you both for coming on as always. But before we go, let me just encourage everybody who's listening. We've got 467 people on the stream right now. If you guys could do us a couple solid favors, subscribe to the channel where you're watching, but also make sure to subscribe to these guys on their YouTube channels where they're putting out free content for traders in the trading space. Their links are in the chat right now, so you can find Miko. You can also just search up Miko Audu on YouTube, or you can search up Marco's YouTube channel, which is Marco's Trading Journey, or use the links being dropped in the chat right now. But do me a favor, go subscribe to them. They offer great free value to the trading community like we're trying to do on the show, and they come on every week to add value to the A1 Trading Show as a weekly contributor. So guys, thank you very much for coming on, spending some time, sharing some chart ideas with us.
Thank you.
Thank you. See you next week. Goodbye.
See you guys.
Bye.
All right. Always good to have Miko and Marco on again. Weekly segment that I always look forward to. And, the notorious grandma indicator conversations that we have, they're always good. Speaking of Bitcoin, again, still kind of chopping around. At one point, Marco couldn't have called it better. Or when he started sharing the grandma indicator, his grandma was mentioning to him, what are you thinking about Bitcoin? And again, we love these people. We have nothing, there's no vice here. We're not teasing or making fun of them. But when people who don't pay attention to markets start paying attention to them, it is actually a really good anecdotal indicator that we might be reaching a top or a bottom. If you ask everybody about stocks or Bitcoin and they say, oh, that's a scam and that's stupid, might be a time to look at them a little closer. And if you ask, if people are asking you about Bitcoin and stocks and or gold, right? Same thing for gold. Oh my gosh. I personally have a story I'll just very quickly tell. Back in like 2020, peak gold prices, a close friend of mine, again, not downplaying or teasing this person, but he's not a trader. He's not an investor. In 2020, when the market was ripping for gold, like right around this, see how it's June or July? I was on a dock with him. We were hanging out. It was the summertime, right? Summertime, June, July, August, somewhere in that neighborhood. We're on the dock hanging out. And he said, Nick, you need to buy some gold. And I said in that moment to myself, Why'd you have to say that? Because now it's going to go down. Sure enough, it went down for the next like month, well, multiple months, ended up being a really big topping signal. And again, nothing against these people, but when everybody's talking about a market, it means it made it into like the mainstream media. And oftentimes the remaining buyers are going to dry up pretty quick from there. Remember, you always got to think about who's going to buy from me after I buy. It's a game of musical chairs ultimately. So if the last people to buy are like the retail crowd, there's not that much volume left, or at least that's the theory, right? Anyways, just something to think about is be careful chasing things that are, everybody is chasing. Right now, gold still looks very strong. We'll see if that momentum can continue. It can continue much longer than people expect it to, but you do also want to be aware of potential contrarian signals forming in markets. Okay, guys, up next, we've got Forex James taking over the show. He's going to be taking a look at some chart setups and markups as he does multiple times throughout the week on the show. I do also want to encourage you, if you're a real A1 Trading Show fan, the realist fans also follow all of our contributors who have their own profiles, socials, contacts, all that sort of good stuff. Make sure we're going to drop the link here to Forex James. If you're a regular, make sure you're subscribed to him as well. He's up next here on the A1 Trading Show. Last call, by the way, for the Edgefinder free week event. If you're not currently using the Edgefinder for free, what are you doing? It's completely free this week. No strings attached. All you have to, well, there are some strings attached. Basically, we're going to add you to our email newsletter, but you can unsubscribe at any time. But if you want access to the Edgefinder, it is completely free to use until the end of this weekend. Take advantage of the free week by clicking the link right here, joining our Telegram channel, and within the Telegram channel, right here is the Edgefinder free access link. So there you go. Okay, guys, up next, we got Forex James taking over the show. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, how's everyone doing? I'm seeing a lot of support in the chat. That's nice. I love you guys too. So how is everyone? We've got one more day until it's the weekend and we can go to the pub, have some drinks and start some fights. I'm joking, of course. We don't condone that behavior around here. So, dollar yen, not looking too healthy. I still really like the idea behind dollar yen shorts. Probably not the best time to actually go for it, though. Obviously, with the dollar having already sold off, let's change time frame. Already sold off, and very likely here to be sort of continuing a pullback, whether it's 50% pullback or a full correction, no idea. But yeah, probably not the best time to sell your dollar yen. US500 is moving fine. We are seeing a pullback here. Now, I would expect this to just be a gap fill. I don't think really anything's changed. We did have some tariff news overnight. We had Trump threaten Canada and Europe, saying that if Europe and Canada basically try to fight back, he will just increase tariffs. So I think there's a little bit of fear being put into the market. But again, we've got this market gap, so I wouldn't expect it to be a huge downturn on the S&P like we've previously seen. Euro dollar again is moving fine. I actually scaled into euro dollar here just on a short-term trade, just looking for a 1% gain. So nothing too crazy there. Aussie New Zealand still looks really, really good to me. Sorry, I just need to get rid of that. There we go. Still looks really good to me to continue to the downside. The problem is it's just a very sideways moving market. It's very, very ugly, really. It's a very horrible market to try and get a trend on. So even the trade we had before essentially was sideways movement for a couple of days before we finally managed to take some profits off the table. So it wouldn't be a shock if we continue to see this market move sideways until we get a catalyst for it to go lower. Google is another one I'm in. This wasn't my trade necessarily. This is one I took with a friend. So not going to worry about that one too much. Euro Swiss, again, I love Euro Swiss to the upside. I think all the factors are still very supportive. It's more just a case we need to see some momentum now come into the market. We need to see the buyers start lifting price. At the moment, we're not really getting that. We did reject off the 50% pullback, also rejected the 200 moving average, which is nice. But yeah, it's more a case now if we can see this momentum follow through. We did take a long on the pound yen this morning as well. This was a little bit more of a contrarian view, as I'm pretty bullish on the yen. So my my trader and elite traders decided to take an opposite position just to hedge off some of that yen risk. We've also got the Nasdaq as well. So I took the Nasdaq at half risk. So this position is only at 0.5. Again, because I'm expecting this gap to get filled. So I'll add in to another 0.5% risk if we do see this gap get filled fully. That would then round off this position at 1% risk in full. Sean, I'm good, thank you. How are you? Shills, yes, good to see you. How volatile do you think pairs will be on April the 2nd? I don't think they will. I think a lot of tariff things are being priced in. I wouldn't expect anything too huge unless something changes. I'm looking to buy gold at I guess you mean 3,030 on a pullback. Yeah, I think we had, just another one. We got out of silver for around 2% here. So that was a nice catch that we caught as well. So silver's closed. Gold, I would also love to get into gold. So if we can see a pullback into support, I would quite happily buy it. I did miss the entry here just because it was a little bit too high at the time. But in hindsight, always looks a lot better in hindsight. Ideally, though, in a perfect world, a pullback to this 50% level would actually be much better. Let me just draw that properly there. This would line up with previous structure at the previous all-time highs, and it would be a very healthy pullback. It would allow price to come and meet this 200 moving average as well. So I think this would be ideal if we can get that sort of situation. What do you think about silver? I'm still bullish on silver. I would probably re-enter silver if there's another setup that comes along. So you can see it's essentially been a rinse and repeat. Let me just remove that because that was a break-even stop loss marker. So silver has been the perfect example of an uptrend. So we had low, higher high, higher low, higher high, higher low. So it's a case of just drawing a fib. So you can see 0.5 entry, 0.5 entry. So yeah, if we can see that again, so if we see something like this, maybe then I would go in again at this 0.5 pullback. Possibly. I'm not saying I will. I'd need to monitor it at the time, but that is an option. I have a long position on NASDAQ with SL. Okay, let's have a look. Let's see your stop. Here. Why is it there is my question. Because you could have put it slightly lower, like where mine is here, and that would have been at the previous lows. Or you could put it down here at the previous lows. Here is a little bit random, in my opinion. I think that's a bit of a strange place to have a stop loss. I'll be perfectly honest with you. Did I listen to Spring Statement? I did. I streamed about 20 minutes of it, and then I'll be honest, I got bored, so we turned it off. But yeah, nothing too interesting. It didn't sound positive from what I heard. We also had lower CPI, so I'm not really looking to buy the pound at this point. Swiss yen, please, James, back on the rise. Yes. So as I was saying, I think it was yesterday, I still really like Swiss yen, especially on this daily time frame. I think it looks great technically, and I still like the fundamental idea behind Swiss yen shorts, but it might just take some time. So we could be really aggressive and enter short now off this 200 daily moving average, or we could wait to get some more data from Japan in terms of what the next inflation numbers are, how the labor market's doing, and then we can start gauging whether the Bank of Japan is going to have to hike on the next decision, because at the moment it doesn't seem very likely. It's probably going to be later in the year. which doesn't make me want to sell Swiss yen just yet. So yeah, in as far as I'm concerned, we just wait. How many trades do you have open? That's a good question. 1, 2, 3, 4, 5, 6, 7, 8. But I've got 2, so that'll be 9, 10. So I've got 10 positions open. Obviously, that accounts for scalings as well. It's also Euro Pound. It's funny, we spoke about Euro Pound yesterday, and I was saying I don't ever like to really go long on Euro Pound unless there is some really major reason behind it. Yeah, I mean, it's actually, yeah, what we spoke about yesterday has played out pretty well, actually. But what this market does typically is it has very aggressive upside movements. And oftentimes these upside movements can shake out weak hands because, you know, they look small here, but this is a daily time frame. So if you're trying to dollar cost average this on like the 30-minute or the H1, it can feel brutal. But what generally happens, and again, not always, but generally, we do see it followed by even more aggressive downside and a continuation lower in this market. So I would say that Euro Pound is going to continue to the downside. But yeah, just be cautious as always. Royal Trades, hello, good to see you. How do I exit trades? I will often click the X on MetaTrader 5, or I will slide across on the position and click close trade. No, I'm joking. It depends. So very rarely, I'll show you 2 situations. So there's some times where I'll take Nick's approach, and it's likely what I have to do with gold because there's no structure for me to have a target from. So let's say, let's just say I entered here. I wouldn't really look to close out. It would more be a case of just trailing the stop up until it is stopped out. And again, that's just because there isn't any structure for me to use or use as reference. Whereas on silver, we did the opposite. So we reached 2%, we reached previous highs. I'm happy to just take my money and get out the market. I'm not someone that likes to hold trades for too long. I like to, you know, take what I've got and just leave. And if the trend is still there, then I'll enter again on the next pullback if, you know, the same reason is still valid. And generally, I think I've found that a lot more profitable rather than just having one position and trailing stops. But obviously, it depends on everyone's management. Hot dog, I'm not really sure what you mean, but no, just from what I understand. So it's an EJ short to 156. I'm not sure, to be honest with you. I'm going to say no, just because the yen isn't convincing to me. It wouldn't shock me if the yen can come lower. So yeah, for now, I'm just going to say stay away from the yen. And of course, that's just my view. Or when I say stay away from the yen, I mean for long-term, long positions on the yen, it doesn't interest me. At this time, again, long-term, yes, cool. But right now, it's not really the time, in my view. Do you think it's too late to enter EU? I'll be honest, for questions like that, I need more context. What time frame you're looking at? Where'd you stop? Where'd you take profit? Because, you know, if you're trading the 1 minute, then probably not. But if you're looking to trade the daily, then yes, you've probably missed it. Can we enter copper? Of course you can. As long as your broker has it, you can click buy or sell. Exit in profit. Yeah, we're actually up 10% this month so far. We've still got a few trades open like dollar yen. That's probably going to hit stops, but yeah, we're doing very well this month actually. And I genuinely think, because I was very honest about this yesterday, I'm really not sure what to do in the markets in terms of swing trades and longer term positioning. I'm just not in a position where I want to or feel comfortable placing longer term trades. So all I've done is just look for 1-to-1s, 1 to 1.5, and I've just been taking profits. So I've been having, on average, I'd say 1 trade every 2 days, and it's worked out really, really well. And I think it's because we are getting strong fluctuations So it allows me to be able to take profits quite quickly and get out. So that's a lesson on being adaptive in the markets and being able to understand the conditions and adapt your strategy around it. What's my take profit on Euro Swiss? Actually, you know what? You're gonna have to pay for that. Join my Discord. No, I'm joking. Take profit is just at previous highs. Again, not looking for anything too heavy on this one. And I'll be completely honest, I'll likely cut the trade around here for just under a 1 to 2. I mean, it depends how, what the momentum feels like, how the markets are moving, what the developments are at the time. But yeah, that's at the moment, this is where I'm looking to target. Today's GDP. Yeah, GDP ticked up in the US, but unemployment also ticked up slightly. It was higher than previous and lower than forecast. So not really terrible, not great, pretty flat in my view. But GDP was good. What's the one single tip you'd give to a newbie? Learn economics. When I say economics, I don't mean do a 5-year university course. I mean, just understand monetary policy, understand inflation, understand the labor market. Because essentially, and I was talking to Nick about this yesterday on my segment, and I didn't mention at the time, but I should have done. What we are essentially is interest rate traders. You can boil it down. I mean, when I say we are, obviously I'm speaking generally, but what we are trying to do at the core of things is decide what central banks are going to do what, and then we can find some sort of divergence. And generally, that is a very, very profitable way to trade. And it's a very easy way to trade as well. But to do that type of thing, you obviously need to understand what the central bank is making decisions based on, such as CPI, PCE, again, labor market, inflation. So if you can sort of understand that on at least a basic level, you're going to find trading much, much more easy compared to if you were just drawing lines and boxes and trying to essentially get a 50-50 of whether this box is going to support or not. Am I drawing fibs wrong? My fib settings seem to be flipped. Maybe. I don't know how you're drawing them. But yeah, I mean, if you're looking to buy, you draw start at the bottom, end at the top. So 0 should be the end point and 1 should be the start point. How's EU? Let's see. EU's doing okay. Nothing major. Thoughts on Euro New Zealand. Wait. Euro New Zealand longs. Okay. Where's Euro? Yeah, so I don't mind the idea. I think the euro is still I'm not going to say benefiting, but it's still supported by the less restrictive ECB policy and the stimulus from Germany. So it does lead me more towards going long on euro against weaker currencies. The problem is, for me, there isn't really a setup here. It's like a half setup. So yes, we've got previous structure. The 200 moving average is still below price. The RSI was kind of oversold, so it's fine. But we didn't come down to the fib. And the fib for me is like one of the core things, and it didn't do that. So I can't enter this. But, from someone else's point of view, I could understand why. Again, what I'm trying to say, I don't mind it, but for me, it's not quite there. If you were to write a book, what would it be on? I don't know. I've thought about writing things before, but I'll be honest, I just don't have the patience for that. I don't know. It'd probably be like an autobiography about me, how to go into trading from not being in finance, from a completely different career path, and then go into like strategies and economics and things. But, who wants to read about James? I don't know. Not many people, I would imagine. So yeah, fill in the gaps on the indices here, which is a good thing, actually, because once this has happened, we can then make the next step. So I'm going to delete this. Change the color of that to, let's make it pink and big. No, not that big. This big. That's fine. Okay. So the approach here. So what I'm going to do for NASDAQ, because I'm already in the S&P, it's quite a good entry. So I'm not looking to get into the S&P again. So I want to trade around the NASDAQ. So I'm going to go into lower timeframes. I'm just going to see how it reacts on this gap fill. So on this broker, it actually doesn't show the gap fill, which is a little bit annoying. But I'm just going to wait for something to happen on the 15 and just wait for some sort of bullish signal. Can you check out pound yen? Yeah, there you go. So as I was saying earlier, I think the yen is a good long position, but that's if you're wanting to hold a long-term trade. And I'll be honest, I don't really like the pound either. Again, this wasn't my trade. This was a little bit of a hedge for our dollar yen short. Excuse me. So to be honest, I would actually prefer to go short, and that's because we had lower CPI in the UK. And during the budget thing we had yesterday, it didn't sound very good. It actually sounded quite pessimistic about the UK, which isn't a surprise. I mean, it's a bit of a dump. So there is that. But we'll see. I'll be quite honest with you. I'm really not sure. You like GJ sells? Great stuff, Charles. Go for it. Do you use your fib to set take profits? Yes, I do. So you'll notice on silver, that's what I've done. So normally, if we had a very clear trending market and I wasn't in that many positions, I would actually set a take profit here, which is a negative 618. And the way I would normally do this is a stop loss at 1, a take profit at the extension, and this will generally give you around a 1 to 2, obviously depending on where the entry is. But in these cases, because my only goal really was just quick trades, get in and out, take the money. So I've been using just the 0. So this would be the previous high or the previous low. In this case, the previous high because I'm buying. So yeah, the fib is a good place. Oh, sorry, a good tool to gauge the position. So for me, it tells me where the entry is, where the stop loss is, and where the take profits is. So yeah, keeps things simple and straightforward. New Zealand US dollar sells. Yeah, I would go more into the sell side, but I don't know. I really need to see what the dollar's going to do. At the moment, I can't trade this. I need to see either this full 50% correction or a full correction of the move or some sort of rejection here to the downside. I need to just see some direction. I don't want to buy into this because if I buy into it, all I really have is this room here. So yeah, just got no real interest in any positions right now. I'm planning on taking long till previous market highs. See a good SMC setup. That's good. You're doing what I was doing, but it was flipped. It doesn't really matter. The 618 would be slightly off, but the 50% is 50% regardless of how you draw it. So CAD yen's at a nice level. I've not checked CAD yen in a while, actually. I also like CAD yen. Let's see. It does look actually like the most attractive yen pair. Yeah, I do like it. I'll add it to the watch list. I'll keep this one in consideration. Oh, it's got fib as well. Didn't even think about drawing the fib. Look at Sean. You're on it, Sean. Oh, maybe if we can get a daily bearish close, I will look to take it. Yeah, betterment. I don't know. Latte, please. Sean. No. Us poor traders can't afford a latte. We lose all our money gambling on the markets. ICT is addicting. Yeah, it's addicting. It keeps you gambling. Anyway, I won't let my political view get into this. Yeah, not seeing too much actually. We're seeing a little bit of a reversal on these positions. Quite happy to see dollar yen start to pull back. That's quite nice. I might be able to reduce the loss on that one. Euro Swiss back to entry. Nasdaq's falling off a cliff. I might go into Nasdaq again here. Let's see. So the gap, I'm going to remove this because I don't need that. The gap has now been filled, but we could actually come lower and correct this candle as well, which does seem to be what's happening so far. So I'm just going to pay attention to that. $10% this month, you can afford a fancy filter coffee. Do you read any books? No. I've got books, but not trading stuff. I've got this one by Epictetus. Epictetus. This guy, this fellow. This is a good book. It's only, I think it's about 50 pages. And about half of them are ones you've got to write in, which I've not done. But it's just filled with like life lessons and like quotes. They're pretty old, and I'll be honest, some of them are a bit useless and outdated, but some of them have good philosophies behind them. I've got another one about the rules of wealth. But yeah, generally I like to research finance, not trading finance. I mean finance and personal finance, business, leadership, that type of stuff. I've got no interest in, and this might sound closed-minded, but I've got no interest in reading or watching YouTube videos or anything about trading because I don't want to learn new things. Obviously, I'll learn from my mistakes and my trades and what the market gives me, but not from other people. I don't want to hear other people's views because that will start swaying the way I do things and the way I see things. I just added a position to NASDAQ. Nice. I think I might do as well. I'm just going to watch this 15-minute candle. We've got a minute left. What's causing pound strength? That's a good question. I'm actually not sure. I'll be honest. NQ took previous weekly high and yesterday's candle closed bearish. Might continue to go down, but that's my stupid opinion anyways. It's not a stupid opinion, Cedric. If that's your view, that's your view. Did you already check out New Zealand US dollar? I did. Thoughts on US dollar CAD? It's had a really nice run up actually. The problem I've got is oil. Oil's dumped actually. What's happened to oil? Well, I say dump, it's on a 15-minute time frame. Was it the tariff stuff? I'm not sure. I've got no idea what just happened to oil actually. But with oil on the upside in general, short term anyway, it really puts me off selling the Canadian dollar. So yeah, right now, not too happy. Obviously, we just had more tariff news come out last night from Trump. So yeah, to be honest, dollar CAD to me just seems a little bit too risky because Trump could come out and just say anything and it would sway the market. You know, he could ease off on the tariffs, stop loss, or he could increase tariffs, stop loss. You know, I don't want to try and position around that. So I'm just staying away from the Canadian dollar at the moment. ES filled. Okay, let's go back and have a look. So yeah, focuses on NASDAQ. We did have a nice rejection there. So I'm going to go in. Am I going to go in again? Is the question. Do we want to do that? Let's just see. What is my risk at the moment? Okay, that's fine. Not just yet. Ball outs an oil sell. Very nice. Yeah, Royal Trades, I would assume so as well. I haven't seen anything regarding oil. Been averaging into ES. Yeah, I can understand that. Got probably a bit of drawdown on that one. Let's just go up to the 50. Let's go back to the H4. Did we fill the gap here? Not quite. I think the S&P still got a little bit of room to come down. DAX is interesting, but there's nothing really on the DAX. Okay. Yeah, there's nothing really going on right now at the moment. Percentage gain over the last few years. I'll tell you that. So since the inception of Elite Traders in 2017, it's 475.95%. That's not accounting for this month because that's not been updated on our record yet. Yeah, I think NASDAQ's a great, well, actually, sorry, I think the S&P and the NASDAQ are both great opportunities to buy, not financial advice. It's just, if you're not doing an investment strategy, so you're not, so what I'm trying to say is if you're actively trading the S&P or the NAS, it's going to be quite difficult, obviously, just try and time that entry. But I've also got an investment account where I just invest in the S&P every month. This month specifically, I put quite a large amount in, basically betting that the S&P is not going to go that much lower. The S&P was off by 0.1. Tricky. Yeah, the NASDAQ's not really doing much on that fill, which is unfortunate. I was wanting to see a little bit more bullish movement off that, but maybe it will come. I don't want to be too pedantic on trying to get an entry perfectly. I just want to see the market reaction. Because what I don't want to happen is enter another position here and it just continues to dump off a cliff. I just want to make sure that I'm not entering into a really strong really strong bearish downside. I think the oil will move more. I think that oil move was from Uganda's 5 billion oil export pipeline projects. The finished transport. Yeah, possibly. The problem is when I'm on stream, I don't really have, or I'm not paying attention to the news flows. I'm going to go into NAS here. I'm just going to go in small with just 0.1 and just let it run, see how it goes. Aussie New Zealand still sideways. Euro dollars come back to entry. Boring times. Just need to move this up to here. Okay, so second position on NAS is in. Yeah, I don't expect the NASDAQ to just suddenly flip bullish and just start rallying to the upside. But yeah, I just wanted to make sure again that I wasn't selling into a waterfall of sell-off, essentially, which I could have done, but I'm going to take the risk. Oh yeah, USD-MXN was on the watch list, but luckily, luckily, I actually didn't take it. But it might still have something here. Although I'm not really sure about the fundamentals behind the Mexican peso. It's not something I trade very often. Well, something I don't trade at all, actually. So I don't really keep up with the drivers of it. Yeah, there might be something there technically, so I'll have to do some research later. Do you think US 30 will fill the gap? Yeah. I think the gaps generally do get filled. It's just a matter of time. Indian port authorities have denied permission to a shipload with Russian oil due to inadequate documentation. According to Reuters source, ship was carrying around 800. Interesting. Okay. Currencies have been boring. I completely agree. They have been very boring. Yeah, I think gold's looking good. I like this rejection here. So I'm just gonna wait for gold to do something. I'll come back to either level. I'd probably buy off the support if we see something, some sort of bullish sign. And then if that's broken, I'd happily buy again at this fib level. By the way, I forgot to mention earlier, Goldman Sachs has revised their targets for the end of the year on gold. So they were at 3,100. They've revised up to 3,300 now. So you might want to just keep that in mind. I'm not saying they're going to be right. I'm just saying that, you know, if targets are getting pushed up, there's still something in gold. NASDAQ's first trade on funded account. Hope it goes well. I hope it goes well for you as well. Don't take that trade, though, just because I did. I could be wrong. I don't have a 100% win rate, unfortunately. Aussie New Zealand price action sucks. It does. It's an awful market. Yeah, it's a horrible market to try and trade, but I'm taking a go. So could get taken out in noise, but, you know, what can you do? Oh, Google opened lower, not a huge surprise. Euro Swiss isn't looking great. Yeah, okay. Nothing too interesting. You wouldn't trust me if you did have 100%. Call me Enigma. Yeah, well, I don't want to start a cult, so you don't have to do that. So let's just see what's going on the watch list. US dollar CAD on the H4 looks quite nice to short, actually. I was looking at Aussie Swiss as well. Didn't take it because I didn't really have a clear view. Pound New Zealand also was on the watch list last week, but I didn't really get it. Oh, sorry, early this week. I didn't get into it. Pound Swiss has been very difficult because this is another one. Just like Aussie New Zealand, Pound Swiss is very range bound. It does move to the upside, it is moving to the upside, but it's very difficult to really do anything with this. So it's a bit like Bart Simpson's hair. Swiss yen's not doing much. US dollar ZAR, that was on, actually, sorry, it's not in the Edge Finder, but it was the most bought, or the most bullish reading on the Edge Finder, or it still is. Yeah, net open interest actually isn't too impressive, but the net positioning is long. So yeah, US dollar ZAR short positions actually do sound quite good. So I think it might be quite a nice trade to take. If we could see the dollar pull back and reject, and we can see this market come back up into the top of the channel and also reject, I'd quite like to go short, actually. But yeah, that's pretty much it that I'm looking at anyway. What's my win rates? At the moment, my win rate actually isn't very impressive. I think on this account, so the Darwin account you've been seeing, it's at about 49%. So yeah, really nothing great. However, on our track record since inception, since 2017, it's sitting at 56%. So yeah, definitely nothing crazy. Yeah, this month alone, it was around 70%, I think. Yeah, this month has been one of those months where it's just been incredible outperformance, but that's definitely not an every month situation. After Trump becoming the president, I'm actually afraid to take an entry because nowadays markets are unpredictable. I get it. And to be honest, that's kind of why I'm not holding on to much. So what I would say is you could do what I've done this month, and that's follow your analysis, follow your ideas. But rather than going for, a 1 to 2, a 1 to 3 or 1 to 4, you could go for a 1 to 1 or a 1 to 2. And that's been my only plan. I've not looked for anything too big, anything too complex or too crazy. It's just been a case of just taking whatever I can get from the markets and just following the plan as normal with reduced targets. And it's been very profitable. And to be honest, this month it's not just worked out because it's profitable, but it's worked out because a lot of the trades I've exited have actually pulled back or reversed since my exit. So it seems like it's been the right plan. 49% isn't bad if you've got good risk management. Yeah, and it's not just risk management, it's the win rate as well. So when you go for 1-to-1s, you're following the trend, you're following the macros, you've got a set strategy you're following. Generally, your win rate is going to be quite high. On a 1-to-1, 1-to-2, yeah, it's not too bad. But I say this, 49%, we've had this account for, actually, let me just check, because I think we got verified on Darwin this morning. Yeah, here. So we've just been put in for, we just completed our calibration. So we'll be actually in Darwin competing for capital pretty soon, actually. So max drawdown's been 4%, just under an 8% close rate, and that's because I took slightly different risk compared to the signal results. But yeah, anyway. As we begin to get into Forex, how should we go about starting my lot size and TP-SL ratios? So on MetaTrader, I use this. It's a free tool. You can just Google MetaTrader risk calculator. You can go short. If let's say here I wanted to go short, my stop loss was here, take profit was there. To risk 1% of this account, I would take a 0.8 lot size. And you can obviously do it long as well. This isn't an advert, by the way. I've got no idea who made this. I just found it on Google. So you can do that. I would say that's the easiest way to do it. And then finding your stop and take profit, easiest way is just use previous levels in the market, previous highs and lows. And then obviously as you get used to it and as you get better and learn more, then you can start adapting it and maybe adding your own little swing on things. Can we depend on trading income throughout the life without depending on other passive income? No. I would, well, theoretically, yes, but I wouldn't ever say it's a good idea. Regardless, well, I'd say unless you've got millions in an account and you could take, 1-2% a month and live on that for maybe 2 or 3 months, then it's going to be a bad idea, because what you're going to be doing is you have a break-even month or a losing month, or even just a flat month where you might make 0.5% or 1%. You're going to be stressing about, oh God, I can pay bills this month, but I have to perform next month. Then next month you might overtrade, you might get FOMO, you might over risk. It's not good. So I would say if you want to be a full-time trader, because you wouldn't be really, you would need to have something else that brings in money, and that money would need to cover your bills at minimum. So for example, let's say you spend $1,000 a month for rent, utilities, and car insurance, and whatever else you may have. You would need to have something coming in that might be 1.1K, 1.5K, just to cover those bills so the stress is decreased and you can focus on trading. But yeah, I think trading full time is really not a glamorous thing. It's not a case of you can jump on a private jet and go and trade on a beach. You really would be stuck, like I am, sat at a computer for 14, 16 hours a day, pretty much doing nothing. Why are people so against Forex and say it's the most risky and people shouldn't start other markets over Forex? Because people are biased. People will find something they make more money on or they find easier, and then they'll just start spouting it for everyone, which I don't really think is a good thing. NASDAQ. Oh, wow. Nice. Yeah, we caught a good entry there. So, guys, you're more than welcome. If you entered that, please join Elite Traders, because I've just seen live proof. I know where the markets will reverse. I know what's going on. I have over 200 IQ. And I'm a multi-billionaire full-time trader. I'm joking for anyone that doesn't get sarcasm. But do join Elite Traders, because, I'm good. If you have multiple income streams, and if you do, what are they? Yeah, I have Elite Traders. I won't hide that. Elite Traders does bring income, not much, but it does bring some money in. I also have a different business, which I'm not going to disclose here because I want to keep that completely separate from this side of things, but that also brings in some money. So in terms of income, I've got income coming in regardless of my trading results. So if I have a bad month, I'm okay. Obviously I don't want to have a bad month, but yeah, there you go. Let's buy some coffee. Yeah, I do. I've not had a coffee today, actually, which is out of the normal for me. How are you doing, James? How's your week? My week's been very good, thank you. How's yours been? Sounding very ICT-ish. Yeah, that was the point. It was sarcasm. What do you think of AUD USD buys? I like it, but just not yet. So the RBA came out pretty hawkish, neutral on their previous meetings, and they're essentially not desperate to cut rates. So I would expect the RBA to hold their rates. The only problem is we had lower CPI, which might slightly dampen that tone. The other side, or the other thing, is the dollar does seem to be pulling back. I would expect this to be a short-term pullback. I don't think, or I just don't see a reason this will be a trend change. So what I would do if you wanted to go long on the Aussie dollar is to just wait for the dollar to finish whatever it's doing here. Wait for a confirmation, whatever that may be. It might be the fib. You could look at the previous structure, whatever it is you do, and then just look for a potential reversal point in the dollar. Then, yeah, maybe longs are in play. I am bearish on dollar for the next, well, I'd say for the rest of the year. Actually, we just got to be careful of short-term fluctuations. Cool. So there's no Chris today, so you guys have got me for as long as you want, but only if you donate in Super Chat, so you can pay the overtime for the A1 guys. Loris, you know what? I actually would say that's true. I didn't think about that when I was answering the question the first time, but Forex is probably the most complicated thing to trade, because you've got to really account for everything. Whereas I think with the S&P, the NASDAQ, if you're trading futures or options on those things, it's not as intensive in terms of research. Obviously, you need to understand the central bank and you need to have a grasp of what's going on, but I wouldn't say it requires as much work. And as far as I'm concerned, if you were trading futures and just trading like NQ and ES, in theory, your strategy could essentially just be to go long, just buy pullbacks. Obviously, I don't trade them, so I don't really know, but that's where I would start if I was doing that. Trading as a supplement income. Yeah. So for me, I actually put a post out on Instagram a few days ago breaking down what I do with my trading money, or trading profits. But yeah, it doesn't really go very far. most of it goes into other investments. So I'll keep a portion in the trading account. I'll put another portion in a retirement fund. I'll put another portion into an investment account. Another portion will go into crypto, and then the rest of it is just for life. But yeah, that's pretty much it. Stata hubs. My friend, you don't need to ask me 3 times. I will get to your question. It might take me a minute or so while I finish up other things, but I will get to you. So what I'll do is I'll just show you this. So this is the trade behind the Aussie New Zealand. So I'm just going to leave that there for a second. Quang donated. I'm not sure what currency that is. I do apologize. I might be a bit ignorant. But on behalf of A1 Trading, thank you very much. You don't need to ever donate money. Without others who can trade full time, then it is possible, however small. No, yeah, of course. That's what I'm saying, though. A lot of full-time traders have either a separate income. So obviously Nick has A1 Trading. I've got Elite Traders. Even big time people like Anton Creel, ex-institutional, multi-millionaire. He's got a mentorship program. So it's not a case of everyone who sells something that is a trader is, a grifter or a scammer or doesn't trade. It's actually a very sensible thing to have another income source, because financial health is or should be the number one priority. Do you think, in your personal opinion, that only doing technical analysis is enough for Forex? No. I think for some people, yes, but generally, no. I don't think it's a way to really approach the markets, and that's because the way I see it, trading is about 80% fundamental, about 20% technical. By just looking at technicals, you're completely ignoring 80% of trading. You're ignoring why the markets are moving, how they're moving, what they could do next. You're just not accounting for any of it. Remember, all a candle is, it shows you where people have bought and sold. That's literally all it is. So you're looking at past data, trying to then figure out what's happening next. It doesn't make sense in my view. It's great for entries, it's like the fib. I use the fib to get into the market, but I would never use the fib to gauge the direction of a market, or to say, okay, I'm going to draw a fib here and I'm going to buy off the fib just because there's a fib there, or because of support or resistance or whatever it is. It's not substantial. And again, that is just my view. Yeah, diversifying income's the way. But you will see a lot of people completely disagree with that. Like, I got into an argument with ICT the other day, and all these little cult members came into my into my comment section. Oh, you're a signal seller. You can't talk about anything. Well, yeah, I am a signal seller, and everything I do is public. So, what more do you want? Like, if ICT was profitable and he could actually make money, I'm sure he'd be selling signals as well. If you play the probabilities game correctly, risk money management, you don't need fundamentals at all. There is that side of it, Serge, actually. Roughly, I know I'm just spitballing this, but I would say patterns and technicals are about 50-50. So obviously, if you've got a support somewhere and you're not accounting for fundamentals, you're just taking the market face value as a level here, it essentially is 50-50 if that level is going to hold or not. So if you bet on that, but you've also got, you're doubling the money you risk on it. So obviously you go for a 1 to 2, and that works out, and you're winning 50% of the time. But every time you do win, you're winning 2% on what you risk. Obviously you're going to make money, but that's a really big simplification. That's dumbing it down to like the very, very basics. So anyway. Possible but not probable. Yeah, I would agree. Yeah. T-Trade 70 hit the nail on the head there. I think that's pretty much how it is. But guys, I think I'm going to wrap up here. I'll be honest, I've got nothing else to talk to you about, and I don't like you enough to stream any longer. I'm joking. I appreciate and love all of you. But yeah, if there's any questions or anything you want me to go over again, I will happily do so. Not sure you'd look at NAS. Yeah, no, I just had a quick peek at NAS. But, you know, we'll see. We'll see how it goes. You thought about getting into real estate? I've considered it, but it's not a huge priority of mine right now. I want to stay as liquid as possible. My plan is to start traveling. So I'm moving to Asia pretty soon, and I want to move around Asia and travel the world. So I don't really want to have properties and things just yet. Maybe later in life, but right now I'm staying as liquid as possible. Probably not Betterment. I've spent 7 years doing what I do now. I've got no interest in trying to start something that I don't really understand. It took me a long time to understand currencies, and that's only G10 currencies, by the way. So this is where I make the majority of my money. I'm not going to start a new chapter by trying to trade other things. Anyway, guys, that's it from me. I do know about SMC, yes, unfortunately. Guys, have a great day. I appreciate all of you being here. Don't get margin called. I'll see you all very, very soon. Yeah, have a great day. I'll see you in a bit.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.